silver lovers, silver buyers, silver holders, and silver people getting taken to the cleaner. And a lot of people, whether it's the SLV, whether it's this one is the granddaddy of it. And Brian Plain is the one who had called for a market top because I was not focusing on this top. And he had brought it to my attention right here on 4-1, starting that month out. And 5-1, like I said, okay, well, this one's going to come down hard, right along with the SLV when it was up right below the 48 handle, and all those live videos are there. This thing topped out, my friends, at 382, and we're at a 10-month moving average right here on this monthly moving average. Let me get this down a little bit. So basically, you're at 64.9% on the percent DS, whereas you were 92%, and this is on a monthly. So we're still fairly at 65% on a monthly. It's not cheap. It's still longer term overbought. The 10-month moving average is where we undercut it, we hit it. This is the 3-month breakout to all-time highs. It's at jeopardy. The neckline on the monthly bar right here is very crucial. Well, let me draw this a little straighter because I'm doing it freehand. It's right here, right there. And basically, we're violating that. If we sell below the 10-month moving average, we're going to come down. The lower end of that base of 2010, where this bull rally started to the top, right there, to the reversal, if we sell through, that's where we're going to go. Now, that's on a monthly level. Now, when we get over here to a weekly level, is that you will see clearly here when that reversal, what a doji, people get left hanging right here, right there. They're hanging. They're hanging. And we came down on the weekly level where the weekly breakout of these double tops right here where we were corrected, and we burned. And silver was hot. Everybody was exuberant. We made the highs. But people, we have cut more than in half. And basically, the weekly bounce right here is exactly at this major breakout line. This is the upside 1 week, 2 week volatility. However, let me caution people that are holding silver now, and particularly in this one, as volatile as it is that last breakout from here is going to be your resistance. And on a weekly, last week we sold off. Today it's only Wednesday and it's narrow range, but everything has short-term volatility. Now, let me explain you what has happened on the daily, and just like the earlier analysis, is that this is the daily reversal right here. That's called a doji top reversal. This is the neckline that it breached. These were weekly volatility bounces within the actual trend structure right there. And we bounced, but we made the lower low down here, because that's what happens in trends, that once they start in a certain direction, yes, everything has a counter volatility. As we said, it was a great trade off that bottom for 3 weeks, and then it failed. Now, what we have done here for the silver bugs is that you are oversold at 6.35% on a daily, where markets got made here, and we went up to 67% there from that level. Now, let's take a look at the level here. Let's take a look at that bottom level, 6.35%. And short-term oversold gives short cover rallies a great entry and an exit. But you're not in a bull rally now. You're in a severe bear reversal. However, you will get in a shorter term. So there's short term, medium term, and long term. Once again, same rule applies. Kind of like in all the indexes I did today. We're getting short term oversold where you can get these rallies. But then again, the hangover here is that if you look at this rally careful right here, once again, MMTs, 6.35% to the top of that reversal counter trend. We got back up to 67% on a daily. Now, that is very shorter macro 5, 7, and 10 and 20 days trading. 20 days being a full trading month. So, short-term oversold causes good entries, but if you're not selling those entries up at these highs, you can see that you hit 67%. The buying opportunity was here on a daily. Short-term oversold. Here, right now, you're still at 57.2%. but you're falling weak. And the problem is that when you break this neckline of that first bounce, if we don't start pounding off of there, we're still in a daily sell signal that's going the right way. It plateaued here and it's been ascending to there. Now, the key is here is you got to get above that 100-day moving average. That's this line right here. See, 100-day. And it's all daily simple moving average. That's going to be your resistance there at 199.90. And today's ranges were 188.58 and the low was 182, down $1.41 today. On the actual index itself, not the index, but this is your intraday print, and you can clearly see that the close, not today's close, but the previous day's close was there, the low, there is the high of the day, and we closed up toward the high. That is bullish. So when you do close up toward the high, and that you, because of the kind of volatility in this thing, is that it's a good move. If you are holding it overnight, you still have risk, but you don't have nearly the risk in standard technical analysis as when something is closing up toward the high of the day. So if we break that trend line, we're going to come back down here, and the green line was a 200-day moving average where short sellers had such a big move now that there was a big buy to cover. So if you're shorting up here and you're dropping well over 200 points now, a lot of people are in a death trap here. And they held it down. What happens is with the public is it gaps down the first time, well, okay, it's going to stop. Then it gaps down again, and it doesn't stop. And then they think, well, it's going to bounce like it should. But the 10-day simple moving average was rolling over, crossed over the 20-day. Now you're flattening out, which is much more bullish than its original bearish part of that crossover as far as standard technical analysis go. When does silver get better is when you get back to a daily buy signal up here. And that you can consolidate, and that this is going to be the range between short-term top resistance, short-term support, and the lower end of that support of where that rally happened. Why did it happen? It's all because of short-term macro event of 6.35. And right now, even in the current market and certain other individual names, we're starting to see some of these things come into play that make good trades off that bottom within the original bear bull rally bear reversal. And that's why you have ranges and whatnot. You just need to know where you're at in the cycle of that range, because if you're not careful, you can get your head handed to you. That's for AGQ, both working daily, weekly, and monthly.